Lots happening out there at the moment, as we know. Nothing dull in the markets, particularly with Donald Trump around doing his bits and pieces. Basically, he's now accused China of basically violating the trade agreement. Trade war negotiations stall. I wonder why. Anyway, as we know, Trump's all about a bit of bluff. Let's see what happens after that. Remember also, he's just put or doubled the tariffs on steel and aluminum and to 50%. Now, if that's not going to hurt imports or hurt the consumer down the track. Okay, just we heard last Friday, Fed's preferred inflation gauge, PCE year on year came down 2.1%. Well, that's pretty much where the target rate is there. Interesting to see whether we get a dovish tone out of the Fed this week. I think it'll be very interesting. That might change a few things around. If it's a slight little bit of wording there towards that. Obviously, we've been dovish for some time, and the market's sort of expecting that to remain. Interesting to see if the economy does slow down, how much more rate cuts we've got. People are thinking that we'll probably get in for another 0.25% towards the end of the year, but nothing too major there. Remember, long-term inflation is still double to what it is, expect to double to what it is today. Okay, in China, we had the official NBS manufacturing PMI data that rose slightly to 4.9, 49.5. But that's off April's low, which is at 49. So that's a slight rise, which is good. New orders as well. They came up. They were basically up again, so a little bit positive there, but nothing too major. It seems to me the economy there remains baselining. We would like to get a little bit of growth out of there very soon, because that'll certainly help the alien economies around the world as they try and fight with what's happening with the tariffs in the States. Okay, OPEC came out with a meeting last night. From their meeting on the weekend, they're going to increase production by 4,111 barrels. Don't know how they got to that number, but anyway, per day, and that's in line with what they expected. We actually we were expecting a higher number. This is a little bit lower, and I think that's why we've seen that uptick in oil. Because when you really look at oil, and we've got a little bit more of a deeper dive into that, sort of in the technical part of the trade of the market bars. Okay, so let's have a little bit of a recap. What we're finding at the moment, obviously we've got problems there with the stalling of the trade agreements around the world. I think one interesting point here, which we've got to air, is that although the major trading partners, are negotiation with these states, it's interesting to me to think what all the sub-countries, if you think the GDP sizes where you're number 3, 4, 5 and 6 in the world, and their major market is in the States, what actually affects there? So I think there are definitely some major concerns which will come to play, because these people have got to try and negotiate. And if they're not the top end of town, then it's a lot harder to negotiate a fair deal. So I do think that's more shocks, I think, to come in line with what's happening there. Okay, I guess what we do know is US is basically just slowing down a little bit. Some of that data there, inflation's under pressure as well to the downside. That's not too bad at all. So I think if anything there, I feel that the US economy, although people are saying that investors have taken the US economy as a strong story, but I think that things will start to weaken, because I don't think that if you don't get progress on the trade talks and negotiations, then that will stall and the numbers will start to unfold into a bearish outlook. And I think that's the case. And that'll affect some of our equity prices. We still remain relatively short across the board on all equities, except for long-term positions, which are obviously tucked away in super. But from a trading perspective, we still remain short there. And I think the market, if they don't get, after 90 days, we'll see what happens between the US and China. But I do think that the US generally has a funding issue, as we all know. The tariffs are designed to raise cash to reduce that funding, and if that doesn't happen, then the US will be in major issues. June's a very focal point for the refunding of a lot of this debt, because a lot of old debt with low rates rolls off, so it has to be funded now with new debts. And what at the end of the day that happens is that more money has to be drawn from reserve to pay those loans. And that at the end of the day is going to be a problem, because all of a sudden you've had to double, sometimes triple the amount you have to repay. So that's June, where a lot of that debt rolls off and needs to be rolled up. We've got obviously concerns there in China. Federal Reserve, as we know, we got that personal consumption expenditure index eased to 2.1%. That we're right in the middle there, so pretty happy there. The US economy does seem to be stalling. That is a key metric that the Fed does look at. So I do think they're on interest rates. So whether or not we'll get another cut, I don't know. I don't think we'll go hawkish, although as we do look at the sentiment numbers for inflation, they are certainly sort of suggesting they'll be a lot higher in 12 months' time. So that'll be interesting to really see what the Fed does on that front. Righty-ho, now in China, we know manufacturing sector still providing a glimmer of hope across the board. Really like to see that happens. Now we are coming into the summertime, and then with that we do see some terms of production ease. Now with the new tariffs going from 25% to 50% for steel and aluminium, it's going to be really interesting to see how that unfolds. I think if you see a drop off, it's going to be a drop off that we actually do expect in summer, obviously because of the pollution that they actually get in China. Okay, so that was there. I guess if we now look at OPEC. OPEC in itself had their meeting on the weekend. As we've said, they've increased by barrels by 411,000, which I think is something we all knew, so we did expect it to be higher. Now, the interesting thing here, and this is something which I think is a bit of a focus, OPEC, all the fundamental news, whether you look at the OPEC increase in supply, the inventory, sort of enough inventories, when you look at production in the States continues to grow. Everything, just the economy looking to slow. All that suggests that demand is not there and we'll have an oversupply. Of course, when OPEC doing that, we would have expected things to be lower, but that's not the case. Oil seems to be holding up quite nicely, and I sort of get a sense that either the market assumed we would get higher increase in production, or the market's unsure and they think this is actually quite a low area. Remember, if the OPEC adopt the policy to increase supply, then the main reason perhaps is to get prices lower. Remember, to produce oil in the States about $45 to $55. In Saudi Arabia, between $5 and $10 in some cases, the cheapest. So, there is incentive to see prices lower to squeeze production out in the States. If that's the case, then that'll support prices going higher. But outside that, I think it's also very important. We're now coming into the hurricane season. And I think to me, that's a real focus, a lot of that from a trade perspective, which we will talk about. Because what I do think is that last time we had a major disruption was in 2021. We did have one last year, but that wasn't a large enough one to see prices move. So I do get a sense that if you think that August 2021 was when 96% of crude and 94% of natural gas production, in the Gulf of Mexico, was actually reduced or cut. Now, we are in the hurricane season started. We're expecting 16 to 19 of those 3. We expect a category 3. If for some reason that we get anything higher than that, well, that'll cause a bit of a break and we'll see prices higher. Now, whether or not the market's starting to factor that in now is a possibility. We do tend to think that the market sort of tends between $4 to $7 worth of premium due to the hurricane season. I think that's just about to start, so that'll see prices higher.